Oil prices tumbling as fears over the banking sector spreads through the market. We looked at the price of crude falling to the lowest level that we've seen in just over 15 months, off just over 4% today. Bob Iaccino, Path Trading Partners co-founder and chief strategist, joining us. Bob, good to see you again. So crude, falling below $67 a barrel today. How big of a deal is this?
It's a pretty big deal for a couple of reasons. First of all, it's not what I had expected. Last time I was on with you guys, I thought we'd see 95 before 65. I also did not expect that we'd get a couple of major bank failures, some of the biggest in history, and the possibility of not only the Fed pausing, but we've got rate cuts priced in for June and July of this year now in the CME Fed Watch tool. That's troubling to me because that's an economic problem. It's a recessionary indicator to me when you see those cuts being priced in. And you're also seeing that inverted yield curve go dramatically steeper by about 60 basis points since the depths of negative 107 on the 2-10 spread. Now, that's something in the research we've done. You never really see the equity market bottom until the inversion goes back positive and the market starts to realize there's likely a recession coming because the Fed is dropping short-term rates. All of this points to weaker demand for crude oil. And crude oil is a pure supply and demand market. And we've been in one of those sideways patterns that crude oil goes into when the market kind of assumes that supply and demand is pretty balanced. Now, relative to the balance we've seen, still a $10 range in crude oil. So there's plenty for traders like myself who like to trade crude oil to do. But when you see a breakdown like this, if it continues, it's generally a new trend. So helpful for the consumer, except under that sort of dark cloud of the reason that it's going lower is because economic weakness is being priced into the demand of crude oil. OPEC agrees, by the way.
Bobby Ness here. So how significant is it that the banking issues have come up over the last week? I mean, the events of the last week when it comes to the price action that we're seeing with crude. I mean, are you then saying that this is all because of recession concerns? Because up until now, we've had this kind of narrative that, well, China's recovery, this is going to be very bullish for crude, but it doesn't seem to have been that linear. So walk us through that.
Yeah, thanks for mentioning that, Ines. And that's why I said that OPEC doesn't agree. Yesterday, OPEC was reported to have said, and I'm not going to quote who it was because, quite frankly, I don't remember who it was, but they were quoted to have predicted a 2.3% increase in demand out of China. But they weren't sure it was going to happen, and I'm paraphrasing. So they were very concerned about the overall supply picture based on higher interest rates across the globe. Now, I don't think they had any sort of insight into what was going to go on in the banking system, but think about what the banking system does. The banking system lends to industrial clients, manufacturing clients, and safeguards the money of said clients as well as individuals. So if we have a slowdown in that type of lending, which you do see when this happens with yields. When the yield curve is inverted, you're theoretically supposed to see slowdowns. We quite frankly didn't see enough of it, which was a small part of the problems that SVB had. But you see a slowdown in lending and a slowdown in that manufacturing demand for crude oil. We don't expect a slowdown at all in travel. So we expect jet fuel to continue to increase in demand, but that's a very small part of a barrel of crude oil. So if manufacturing actually starts to decline because less lending, smaller credit lines, because of some of the stresses that these banks are under, failures or not, runs on the deposits or not, that's going to slow down the demand for crude oil domestically. And then globally, the ECB is going to be important tomorrow to see if that's part of the crude oil story.
And Bob, when it comes to supplies, we certainly have seen the steady build in inventories, which is also such a critical part of this story. What builds here for just about 10 weeks. We also have that new drilling project in Alaska. How do you see this influencing the price of crude? Obviously, when there's so much concern out there that demand is going to continue to drop or will stay below maybe the levels that we had initially anticipated.
So the Alaskan crude oil project, we can put that aside for now because that's more of a confidence factor, and it is a positive for the supply side of the supply and demand story. But we won't see any of that if it actually comes to fruition for quite a long time. But those stockpiles you mentioned, Sean, matter a lot because you're seeing them not only steadily build, but we're getting closer and closer to being well beyond the 5-year average for this time of year. And if demand falls into that, you could be talking about $45 WTI. And again, very good for the consumer and doing a little bit of the Fed's job for it. One of the things we saw in the last CPI data was that obviously shelter was a big part of that CPI number, but services inflation hadn't declined at all. It's literally been steady. But if we get lower gas prices, that actually could take away a little bit of the cost that's built into the services part of the index. So that's another reason why you could see the Fed back off. So this is really good for the consumer, what's happening. You've got gas prices on the screen right now. They're not that much lower. So you can give consumers a pretty big break by seeing those things break that $3 band that we've been in, $3 plus band that we've been in for quite some time. Yes, we're 90 cents lower than we were a year ago, but we're still $1.50, $2 higher than we were 3 years ago. And that digs in. So you could see a little bit of easing of the services inflation if we can get those energy prices down.
Bob, given the events of over the last week, do you have a new target for oil now?
You caught me too early because I just got stopped out of the longs on the ones that I thought were going to $95. But I would say that a short-term target, let me put it this way. If you were actually to look at a crude oil chart and notice the trend, or I'm sorry, the channel that it's been in, the slightly upward sloping channel that we've been in for about 9-10 weeks. When you have a slightly upward sloping channel and it breaks down, a continuation of that generally means about half to the entire width of the channel lower than the breakout. So that would put us somewhere between $45 and $55 a barrel. I'd go with 55.
All right. Well, a lot could happen over the next weeks and months. So, Bob, we won't hold you to it, but nonetheless, thank you. Bob Iaccino, thanks for joining us.